The House is moving closer to impeaching President Trump. We're expecting to see some voting taking place this week. Leading up to that, markets have seemed to care much more about progress on the trade front, but the uncertainty surrounding impeachment still has the potential to rattle investors. To talk more about this, let's welcome Dan Clifton, Strategas Research Partners, head of policy research, and James Pethokoukis. He is American Enterprise Institute fellow and a CNBC contributor. There's a lot of different ways of explaining the series of new highs, Dan.
Yep.
And I don't know. I use predicted. I know it's early,
Yep.
but I look
Yep.
at the betting sites.
Yep.
I know that the removal by the Senate is at about 9 or 10 cents. So
Yep.
is it that simple that they figure that it's going to be an impeachment in the House and it's not going to go any further than the Senate? Dan, is that why the markets are okay, or is it the election just too far off to worry about at this point?
Well, Joe, thanks for having me on. You know, the S&P is up 10% since Nancy Pelosi started the impeachment proceeding. And as the evidence started to come out and we had public hearings, you really started to see the polls not really moving in the Democrats' favor. And I think that's why you're seeing the Senate odds so low. So based on the current information we have, investors don't see impeachment as a real threat. And look at what has happened since the impeachment proceeding has started. A deal with China, a deal with NAFTA, a new budget deal that includes border wall funding without restrictions, repeal of Obamacare taxes. Man, the president has been more successful under impeachment than when he's not under impeachment. And I think those issues are probably going to be a little bit more important for the equity markets and earnings than the impeachment process. Let me just make one caveat here, though. At the end of the process, let's just say Justice Kavanaugh's hearing, that's when you began to see new information emerge. And so if you start to see new information emerge, investors may get a little bit nervous. But based on the information we have and the polling in the swing states, it seems unlikely the president's going to be convicted. We'll have our votes, we'll move on, and then we'll get to the 2020 election.
Jimmy, this is not without precedents. I can't remember the kind of gains we had during the Clinton impeachment, but what do you attribute it to? I mean, unlike other impeachments, this guy's in his first term. Can we glean anything from the market reaction to what the November next year election is, how that's shaping up right now? Is impeachment going to hurt or help Trump?
Well, listen, I think that's exactly the point. I think that's exactly why Mitch McConnell does not want a long, newsy, unpredictable trial, with lots of new witnesses. He wants to get this thing. I mean, he doesn't care about acquittal. He doesn't care about what the second line in the president's presidential biography is. He wants to get this thing over and put as much distance as possible between impeachment and that election, let people focus on the economy. McConnell wants to keep the Senate. President Trump winning re-election will help them keep the Senate. So that's why he wants to get this thing over. He does not want. Listen, I know a lot of good things happened to during impeachment, and I don't know. I don't think Dan is saying, "Hey, if we get a Senate trial, maybe we'll get a capital gains tax cut." They want this thing over ASAP.
That's right.
Go ahead, Dan.
Yeah, and I would just add to that is that you got a lot of moderate Democrats who are going to have to be able to vote on this in the House. That's also going to dictate the timing of the Senate. Is there going to be political fallout in the weeks through Christmas before the Senate trial starts? So it's a pretty fluid process, but I think both sides have an incentive now to get this out of the way and move on. One interesting point, though, Joe, is that this could actually impact the Democratic primary more than the general election, particularly if there's a long, lengthy trial. It would keep Bernie Sanders, Elizabeth Warren, and other senators running for president out of the key swing states and in front of the most important time that they need to be campaigning in those states. So all odds point to a shorter trial. Yeah, sorry.
Let me say one thing. If you think the president has been good for the market, and if you think more Trump is good for the market, you don't want to be sitting there in the middle of February listening to testimony from Rudy Giuliani in a Senate trial.
That's right.
Do you think that the market would be rallying to the extent it is if Elizabeth Warren was still topping the polls, Dan?
Well, I do think that the Democratic primary has impacted the equity markets, but more on a sector basis, Joe. you saw a big multiple contraction in healthcare, student lenders, all the industries you think would be negatively impacted. And a lot of that multiple contraction has reversed since she's peaked in the polls on October 9th. I think that once you get out of the primaries and you know who the winner's going to be, let's say second quarter, that's when it starts impacting the overall equity markets. But to your point, the president's position has improved over the last 30 days. I think he's a stronger candidate today than he was before the impeachment process started. And he seems to have a little bit of a tailwind behind him going into Christmas.
Why do you say we know second quarter? I thought it would be a third quarter event that we'll know.
Who the Democratic nominee is? You generally know. Super Tuesday is 40% of all delegates.
You think you just know? You think by Super Tuesday we'll know the answer?
No, you'll know who the Democratic nominee is,
right.
And that's when it starts impacting markets. And Andrew, let me make this point. The S&P 500 has predicted every presidential winner since 84 and everyone since 87% since 1928. And it's all in the last 90 days of the election once they come out of the convention. If stocks are higher, the incumbent party wins. If stocks are lower, the opposition party wins. It's been a very good predictor. So those last 90 days of the election are the most important. But in terms of understanding who the candidates are, that will be a second quarter story. And that's when it starts impacting stocks.